This is a Forex Preview here at XM.com. Thanks for joining us. I'm Cristina Marujos. With me today is investment analyst Cristina Parthenidu, and we'll be having a look at the Bank of Canada policy meeting coming up on Wednesday. Now, the Bank of Canada, Cristina, is the first major central bank to hold its first policy meeting of 2022 amid growing speculation of a rate hike, even though the bank eyes April for such a move. Do you think there's a chance we might see a surprisingly hawkish Bank of Canada tomorrow?
Hi, Christina. Well, from an economic perspective, there are a lot of reasons to believe that the rate hike will happen this Wednesday. First, inflation is at the highest since 1991 at 4.8% year-on-year as of December. This is comfortably above the central bank's rate target of 1 to 3%. The second reason is that high inflation is accompanied with a tighter labor market. Despite the high prices, the unemployment rate continues to fall. It's now around 6%. Of course, this is still above pre-pandemic levels and higher than that in the US. But employment is at record level at 19.4 million, and the economy continues to create jobs above expectations despite the restrictions from Omicron. So given the tightening conditions and the rising hiring intentions, well, the labor market shouldn't be a concern for the central bank for now, but instead a motivation to raise interest rates if inflation pushes for higher wage growth in the year ahead. On top of that, rising house prices don't seem to hurt demand for now, and the government and private debt levels are still among a multi-year high. So the central bank could justify a 25 basis point rate hike to 0.50% this week. Also, the Bank of Canada's fourth quarter survey of business executives provided some direction to that, showing an economy running increasingly hot with widespread labor shortages, record inflation expectations, and strong demand. Investors are already convinced for that are fully pricing this scenario. So the bank may not wait for longer, I think. Now, what could go wrong is if the central bank questions how far inflation could run. It has been quite silent recently, providing no clue about its rate outlook. And during the previous meeting in December, it said that inflation could remain elevated, endorsing a rate hike in April, but could still face some softness in the second half of the year. Well, the Bank of Canada usually follows the Fed and not the opposite. So if it holds the same stance, it could still try to gain a bit more time before it becomes more confident about rate hike. Then will probably remain on hold this week. Constraints will probably ease in the coming months, so perhaps it will need more data evidence before it raises interest rates, but that depends how patient it can be. For now, it seems that the rate hike is highly likely, but let's see whether the Bank of Canada will surprise us this week.
Well, that's clearly on investors' mind, but let's also have a look at the Loonie, which has been taking its cues lately from the moves in oil prices. Therefore, can the Bank of Canada meeting offer it some support?
Indeed, high oil prices keep providing support under the Loonie. Canada is a heavy exporter of oil, so higher oil prices are positive for the Loonie. Of course, the past few days, oil prices have been declining somewhat, and given the rebound in the US dollar, that brought a fast drop to the Loonie against the US currency recently. Given that a rate hike is fully priced in already, the announcement itself may not provide further support to the currency unless the central bank signals that monetary tightening will continue. There are more rate hikes priced in markets, so that could be a bullish signal for the Loonie. Also, if the bank appears more confident that the economy will gain more positive momentum in the coming quarters and inflation may not ease fast as previously expected, that could also provide support under the Loonie. So while the announcement itself may not be very contributing, traders could even sell the announcement given this scenario is already highly priced in. But as we said before, oil prices are still protecting the Loonie, and given the supply constraints, I don't expect an immediate downfall in oil prices yet. So high oil prices could still offset any declines in the Loonie, but let's see what policymakers believe about the economic outlook this week.
Cristina, thank you for joining me today, and thank you for watching this Forex Preview on the Bank of Canada policy meeting coming up on Wednesday here at XM.com.